In 2025, investing in gold, silver, and commodities remains a powerful way to diversify your portfolio and hedge against market volatility. Whether you're a seasoned investor or just starting out, understanding the best strategies and platforms for buying these tangible assets is key. Today, we'll explore the most effective ways to invest in precious metals and commodities, highlighting current trends, risks, and opportunities to help you make informed decisions in the evolving financial landscape. Today, we will talk about how to invest in gold, silver, and commodities in 2025. So before we start, make sure to hit the like button and subscribe to my channel. 1. Understanding the importance of gold, silver, and commodities. In 2025, investing in gold, silver, and commodities remains a vital strategy for portfolio diversification, risk management, and hedging against inflation. Gold and silver have historically served as safe haven assets during economic uncertainty, currency fluctuations, and geopolitical tensions. Commodities, including oil, agricultural products, and metals, are essential components of the global economy, influenced by supply-demand dynamics, weather patterns, and geopolitical events. The surge in technological advancements and climate change initiatives also impact commodity prices uniquely. Investors must appreciate these assets' fundamental role as stores of value and inflation protectors. Understanding the macroeconomic factors, such as central bank policies, interest rates, and global trade tensions, helps investors anticipate price movements. In 2025, with central banks continuing to adjust monetary policies post-pandemic and amid geopolitical uncertainties, gold and silver's relevance remains pronounced. Commodities, being sensitive to global industrial activity, reflect broader economic health. Recognizing the distinct behavior of each asset class enables investors to position their portfolios effectively and benefit from cyclical and secular trends in commodity markets. 2. Different forms of investing in gold and silver. Investors have multiple avenues to gain exposure to gold and silver, each with unique risk and liquidity profiles. Physical ownership, such as bullion coins, bars, and jewelry, offers tangible asset control but entails storage and insurance costs. Gold and silver ETFs, exchange-traded funds, provide a liquid and cost-efficient alternative, allowing investors to trade precious metals like stocks without handling physical commodities. Another option is investing in mining stocks or mutual funds focused on companies extracting these metals, which add exposure to operational risks and potential dividends. Futures and options contracts allow for leveraged trading, but require expertise and are suited for speculative or hedging strategies. In 2025, digital gold and silver tokens, backed by physical metals, have gained traction, offering blockchain-based transparency and ease of transfer. Each form suits different investor profiles, balancing convenience, cost, risk, and control. Physical holdings attract conservative investors seeking direct asset ownership, while ETFs and digital tokens appeal to those prioritizing liquidity. Mining stocks combine commodity price exposure with company-specific growth potential, whereas derivatives suit sophisticated traders looking for leverage or hedging opportunities. 3. Assessing market conditions for precious metals in 2025. Market conditions profoundly influence gold and silver prices, demanding keen attention to macroeconomic indicators and geopolitical developments in 2025. Persistently high inflation rates worldwide have heightened interest in precious metals as inflation hedges. Central banks' policies, whether tightening through interest rate hikes or expanding through quantitative easing, directly impact precious metal demand. Currency fluctuations, especially the US dollar's strength or weakness, inversely affect gold and silver prices, since these metals are dollar-denominated globally. Additionally, geopolitical risks, such as conflicts, trade tensions, and political instability, typically drive investors towards safe haven assets, boosting precious metals demand. Supply-side factors, including mining output, recycling rates, and geopolitical disruptions in major producing regions, also influence availability and pricing. Technological advances and increased demand in industries such as electronics and medical devices contribute to silver's industrial demand component. Understanding these multifaceted factors allows investors to better time entries and exits in precious metals markets, capitalizing on cyclical and secular trends that shape 2025's investing landscape. 4. Investing in commodities beyond gold and silver. Commodities extend far beyond precious metals, encompassing energy, oil, natural gas, agricultural products, wheat, corn, coffee, and industrial metals, copper, aluminum. Each commodity category responds differently to global economic cycles, weather conditions, geopolitical events, and technological innovations. In 2025, the global energy transition to renewable sources is reshaping commodity demand, reducing reliance on fossil fuels but boosting metals vital for batteries and electronics, such as lithium and cobalt. Agricultural commodities remain sensitive to climate variability, trade policies, and population growth, impacting food security concerns and price volatility. Industrial metals are tightly linked to manufacturing output and infrastructure development, with emerging markets playing a significant role. Investors interested in commodities can use futures contracts, ETFs, mutual funds, or commodity-focused stocks for exposure. A diversified commodity portfolio mitigates sector-specific risks and exploits trends in global consumption and supply constraints. Keeping abreast of geopolitical developments, climate policies, and technological shifts is essential to successfully navigate commodity investing in 2025's dynamic environment. 5. How to buy and store physical metals safely. Buying physical gold and silver requires careful consideration of authenticity, purity, and storage logistics. Investors should seek reputable dealers or mints offering certified bullion products with recognized hallmarks, ensuring metal quality and weight accuracy. Popular forms include American Eagles, Canadian maple leafs, and Swiss bars. Pricing often includes a premium over spot prices, reflecting manufacturing and distribution costs. Once acquired, secure storage is paramount. Home safes provide convenience but may lack insurance and security against theft. Professional vault storage services, offered by banks or specialized custodians, provide enhanced security and insurance coverage, but at recurring costs. Allocated storage ensures specific bars or coins are held exclusively for the investor, whereas unallocated storage pools metals but is less secure during financial distress. In 2025, innovative storage solutions include insured digital vaults with blockchain-based ownership proofs, merging physical asset security with digital convenience. 6. Understanding ETFs and digital commodities platforms. For those preferring ease and liquidity, ETFs and digital platforms offer compelling options to invest in gold, silver, and other commodities. ETFs trade like stocks on exchanges and typically hold physical metals or futures contracts, providing investors direct price exposure without handling physical assets. Popular examples include SPDR Gold Shares, GLD, and a Shares Silver Trust, SLV. In 2025, ETFs continue to evolve, with some incorporating environmental, social, and governance (ESG) factors in their holdings, appealing to socially conscious investors. Digital commodities platforms enable fractional ownership of gold and silver via blockchain tokens backed by physical metals stored in secure vaults. These platforms often allow instant buying, selling, and transferring of metals with minimal fees. Additionally, they offer transparency through immutable ledger records, reducing counterparty risk. Investors should assess platform security, regulatory compliance, and custodial arrangements when considering digital commodities. If you like this video and would like to see more like it, please give it the thumbs up. Leave a comment and click the button to subscribe.